Hey everyone, today we are talking about mortgage forbearance, what it is, and why you should care about it even if you don't have a mortgage. If you've been following the news the last few weeks, you've probably heard about the CARES Act, and you've probably also heard that through the CARES Act, homeowners can put their mortgage payments on hold for up to a year with no penalties to their credit. Seems great, right? Wrong. There's a saying, if it seems too good to be true, it probably is. Let's break down the nitty-gritty of mortgage forbearance. First, what is a mortgage forbearance? This is when you and your mortgage company agree to temporarily suspend or reduce your monthly mortgage payments for a specific amount of time. Under the CARES Act, the servicer is required to mark your payments as current so that your credit does not get damaged by a late or delinquent payment. However, most servicers are also making a note on the report that the loan is in forbearance, which in the financing world is a very bad thing. Let me give you an analogy. Your teenager borrows a family car and accidentally gets a scratch on it. They come home and tell you right away, "Mom, Dad, I'm so sorry. This was so unexpected. I'll do whatever I can to fix this." Now, you're a good parent. You aren't going to ground them. Accidents happen, but there are still consequences. Maybe they'll have to do some extra work to pay for the repair. Maybe some driving privileges will be taken away because you've lost some trust in them. It's the same thing with financing. They say, "Thank you for letting us know you can't pay your mortgage right now. We get it. Things happen. But we're probably not going to trust you with any new loans for a little while. Just seems a bit risky." When you go into forbearance, you show that you are a higher risk borrower, which means it will most likely be more difficult for you to get any type of financing. And the financing you do get will be at a higher interest rate. So you won't be able to get that new credit card. You won't be able to get that better interest rate on that car loan. And you won't be able to get that higher priced home because your interest rate will put your debt to income ratio too high. Secondly, what happens when the forbearance period is over? Well, each servicer is a little different in how they will handle repayment, but what we are hearing is that many borrowers from multiple national banks have been told that they need to repay any delayed payments in a lump sum. So what does that look like? Let's do a little bit of math. If your mortgage payment is $1,500 a month and you get a forbearance for 6 months, then on month 7, you will have to pay $10,500, which logically, you probably won't be able to pay that lump sum because if you were able to come up with that money, you probably wouldn't have needed a forbearance in the first place. So at this point, you have to ask for a loan modification, which usually means taking that lump sum of $9,000 and spreading it across 12 months. So your new monthly payment would be $2,250. Not super affordable, especially if you're already struggling or maxing out at a $1,500 payment. And this is one reason that loan modifications can very easily lead to foreclosures. Oh, and a loan modification is usually seen as another bad mark on your credit report, on top of the forbearance. So this forbearance that was supposed to help get you out of a difficult financial situation now seems to be putting you into an even stickier situation. Please know that you are not alone in this. We are all having to learn how to make it through this economic hardship. A big part of that includes making some lifestyle changes, cutting back the budget to only those most essential items. Keeping a roof over your head is essential. Your home is the largest investment you will ever make. Please try to protect that. A mortgage forbearance should only be used as a last resort option. I cannot emphasize this enough. The risk it poses to your family's financial well-being is truly not worth it, except in the most dire of circumstances. A forbearance is not a get out of your mortgage free card, and there is no such thing as free money. So why should anyone other than homeowners care about this? Because we're all connected. I'm Rebecca Daniels with Homes with Bekah. If you have questions about real estate or you need help buying or selling a home, be sure to give me a call. As always, stay safe, stay healthy, and make it a great day.